Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical momentum outlook for the weekly supplemental for the first week of May 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only, to support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well there, welcome to the inaugural video of the weekly supplemental that you could find here at the futures, ETFs, and market cap leaders each week as we take a look at a variety of the different markets already reviewed in the weekly video for the futures, covering the market indices, crude, gold, and the euro. Most recently, in the last couple months, taking a look and broadening the horizons of this trader, looking at ETF futures, key indices, and a variety of different markets for you. Using the template that you see here available, as once you click on the weekly newsletter here at TradingFibs.com, weekly supplemental, going ahead and getting a publication here that includes a variety of different charts, including the current trend in the market. If you want to capture a small tutorial that I went ahead and just did last week to give you a brief look at the charts, as you can see here, the key chart with this is the Thinkorswim platform. This is also available on the Sierra charts, the T3 moving averages together with the 50, 144, and then the daily and the weekly with the same moving averages except the 50 and the 200 simple moving averages. Middle studies here, you see the Heikin Ashi, the multiple moving averages in the middle, and then the Heikin Ashi oscillator down at the bottom. Not available on the Sierra charts, but hopefully be able to put that study on there. But again, for the most part, the trend is the trend. When we see T3 moving averages combined with the 50, 144s on a variety of different time frames, again, the same strategy used intraday together with the multiple moving averages down here. These templates are available. If you're interested, please take a look at the newsletter. At the end, there's additional information there for you. So each week we take a look at the major indices as well as those ETFs, market cap leaders, doing a quick rundown as towards where is the current technical momentum. Well, how does that help me as a trader or investor? Well, if you're looking for the intraday setup, the same strategy used on the futures can apply for stocks, options. Again, if you're looking for the longer term hold, here on the Thinkorswim platform, we have again a hybrid of the charts that I just showed you with the T3 moving averages combined with the Heikin Ashi oscillator and the multiple moving averages together with the 50 and the 200 SMAs here in the bottom right. Together with the intraday charts on the left hand side. So again, if I know the market to be in a pullback here with the bigger picture is green in the background, meaning the 50 is above the 200 here, or 50 above the 144 on a 4-hour chart, I would look for the pullback entry that would put me back into the upside on an intraday pick that you could see here on the left hand side. If I'm looking for the short, again, I can find the price action crossing over on the 4-hour and then the intraday setup to the downside. So a variety of different combinations that you're able to put together there. This template also available on the Sierra charts, together audio alerts and buy signal, sell signal. But again, simple moving averages, exponential moving averages, guys, nothing too complex here to get the big picture. You see not a lot of things running on these charts. Works intraday, works long term, and puts you into the trade. And hopefully holds you, let your runners win and run, and cut your losses short. All right, let's take a look at the overall big picture, a selection of charts that I decided to give us a big picture of the market as we head into week 18 here. Here we see price action. Let's take a look at the big picture key indices here on the SPX is price action on the T3 moving averages, finding a crossover to the downside. So there's our short-term pullback for week 17 here. Looking for that support at the 50 EMA right now. Solid body Heikin Ashi showing a pullback and continued trend. We'll look to see price action, see if it holds up at the 1 144. I need to do a check on that, Jedi traders. I believe that to be a EMA, a 144. It shouldn't be a 200. It should be a 144 EMA, but especially on a 4-hour chart. So apologies there. We'll check that out and clarify that for next week. Or change the chart at least. All right, taking a look at the VIX here. Price action on the VIX holding up here. Again, having it right, 144. Price action solid body. So again, you see the contrast here as price action comes down on the obviously the SPX here. The price action on the VIX here, the index finding resistance here at the 144 as the T3 moving averages cross upside. Again, if the market continues downside, we'll see the VIX cross back up to the upside above the 144. But resistance on both sides. All right, let's take a look at the SPX on the 3 charts. As we saw there at the beginning, price action pulling back, T3 moving averages to the downside, holding here right at the 50-period moving averages. On the daily, we can see support here down at the average true range. But again, the bigger picture on the SPX here, still in the green, the multiple moving averages to the upside. Heikin-Ashi oscillator still in a long position, but again, the pullback here on the 4-hour chart. So if I'm looking for any intraday, obviously these being indices, but if I'm looking for an intraday setup, I'd obviously want to see the 4-hour chart starting to change trend, solid body tail up on the Heikin-Ashi bars, and eventually a crossover to follow through what I see here on the daily and the weekly charts. Nothing complex here, Jedi traders. All right, let's take a look at the dollar. We know the dollar to be downside, rejected right there at the 50-period EMA. So trying to, obviously saw the trend starting to change there, but again, T3 moving averages eventually brought it back down. So reject right there, resistance, put you back into the downside. So if you're trading the ETF on the dollar, there it was, back down to the downside, DXY. T3 moving averages back to the downside, holding in a short-term position, both on a weekly and a daily, to the short, whereas the long-term, still dollar, still holding upside, 50 above 144. You can see the reversal of the multiple moving averages on both sides. All right, let's take a look at the XAU gold and silver index here. Price action holding to the upside as we see the T3 moving averages holding to the upside, both on a weekly and a daily. So always looking for an opportunity, a pullback here. As you can see here this last week, Heikin-Ashi bars back to the upside, average true range holding up, multiple moving averages. Again, watch for that resistance. So you gotta pull through on the 4-hour and the daily. Question here and now is, where might this stop? We'll take a look at 95.21. That might be a level to be concerned with. Again, pretty much overall trend sitting to the upside. No questions about that. Taking a look at the oil, XOI, price action to the upside, T3 moving averages. Found that support still. Haven't broken through that average true range here. Again, on the Sierra charts, I would be using a Kiwi trailing stop. 50 above 144. T3 moving averages holding upside on the daily. Watch for that 50 to eventually cross that 200, but that weekly still not able to break above that 1179. And finally, the new NYSE composite. Again, we saw in the market a pullback this week. Found support here. The average true range, 50-period EMA, still upside above the 144. So the 4-hour chart, short term, still in a long position. Watch for that 50 to cross that 144. If we get a pullback and we break back to the upside, weekly still to the upside, T3 moving averages to the upside, 50 above 144. So the bigger picture for the long term is holding up, but again, the weaving of the multiple moving averages, you're going to have to wait for that to swoop upside. That will obviously bring the 4-hour and the daily, or vice versa. One will bring up the other. All right, let's jump right into total stock market index. We can see here on the IWT total stock market index here, price action holding to the upside. Hang on a second, let me check something here. IWT in the let's take a look at the actually the momentum, the technical momentum. I think I skipped a chart here. We'll come back to that. Yeah, we'll get back to that at the end. All right, price action here on the IWT here, the transports holding to the upside, as we can see. Price action coming downside, so transports T3 moving average falling downside, 50 above the 144. Again, bigger picture for the daily and the weekly. Weekly in the green, a 4-hour in the green, but it's the daily still trying to get back to the upside. So we'll see what happens this week. Look for, again, the key levels here to support before a pullback occurs to the upside on the 4-hour chart. Taking a look at the financials, price action finding support here at the average true range. Again, if we hold here, daily will hold here at the at the 200. Again, the weekly picture is still with resistance, so tough bunch to be in here. But again, any pullback here will be to the upside, but right now the continued downtrend, what will tell me that the financials are failing? Well, if the T3 moving averages continue in the red here, break the 50, break the 144, and the daily continues to the downside as we'll watch the curve just come back. But for right now, hold here looks good. All right, taking a look at the technology sector, as we saw in the NQ, we saw in the triple Q this week, Apple earnings out, T3 moving averages to the downside, 50 still above the 144. So tech sector still in the green, multiple moving averages still holding to the upside. Again, we found support here at the 200 on a daily, so that's good, and we're finding support here on the 50. So as long as we find support here, again, I would look to Fibonacci levels and retracement, but again, short opportunities are available, especially at an intraday follow with the 4-hour chart. But again, if you're looking for the long position, I would encourage you to wait for the T3 moving averages to cross back to the upside, solid body tail up, at least cross back on the T3 moving averages, as the majority of the sector is still in the green. Taking a look here at, let's go to the diamonds. Taking a look at the major ETFs here. Let me get some of my charts up here. All right, taking a look at the diamonds again. Price action holding to the downside on a pullback, but again, key levels here: 50-period moving average, average true range, and T3 moving averages on the weekly after that pullback in mid-February, and has been holding up aside ever since. Again, you can see the diamonds with a little resistance here on the weekly. Watch for the key levels here. Again, look for the 50-period moving average, 174.10, just slightly above the 144 on a 4-hour chart. Taking a look at the triple Q, same picture as we just saw in the tech sector, same picture we saw in the NQ futures index as the T3 moving averages to the downside, but on the futures, 50 has already crossed 144, so leading index to the downside. Has me a little concerned. Again, open gaps below, Fibonacci retracement at 38% right now, but price action has been pretty much in a downside on the daily, so look for some of these levels to hold. If they don't and they come down, we'll see a switch in trend. For right now, tough call here on the triple Q, as we've already broken downside on the T3 moving averages and solid bodies tails down. So right now the current trend is to the downside. The weekly will show the continued trend if T3 moving averages go red there. Taking a look at the SPY, same picture overall on the ETFs, on the indices, price action pulling back. Again, look to the key levels here, average true range 144 to the downside. Taking a look here at the gold, as gold pushes upside, T3 moving averages holding to the upside, 50 above 144 all across the board, 50 above 200 SMA, and then kind of in this quasi zone here as gold unable to break yet above that, back above the 200 SMA here, but holding above the 50 at this current point. But again, the downtrend is still ever prevalent on the weekly charts. Take a look at the oil ETF here. As price action back to the upside. Again, you find a pullback opportunity. Solid body tail up, puts you back into the ETF to the upside. And you got 50 above 144, keeping your stop back at the average true range. Kiwi trailing stop, keeping you in the trend, letting your winners run and not letting your shorts run you. T3 moving averages back here on the daily. Watch for the USO as the future is closing out some major gaps upside. Again, how far we run, watch for these moving averages to form some type of resistance. We do still have open gaps below on the futures, which doesn't look good for a continued run, as eventually they will come back down. Looking at the emerging markets, price action again here, finding support at the 50-period moving average. On the daily, T3 moving average is starting to cross over here, but still in an uptrend. So watch for the T3 moving averages cross here on the daily. That would keep the emerging markets to the upside. Look for the breakout, solid body tail up on the weekly. But again, the majority, the continued trend here is just a pullback on the weekly, so a little concern there. If anything needs to push upside, if that weekly pushes upside, then we'll see that 4-hour and daily, or vice versa. If that 4-hour chart breaks back upside, we'll see that weekly continue upside, and that would give you a confirmation of change of trend, or at least on the way to a change of trend, as the background is still red. All right, taking a look at the bonds, ETFs, 20-year bond, T3 moving averages holding downside. There's the resistance there at the 50, but again, green, green, green all across the board, but finding support, finding resistance on the shorter time frame. Nothing more than a pullback on the weekly. Not concerned there. Pretty major gap here, so watch the T3 moving average both on the daily and the 4-hour. If this is resistance and we get a solid body tail down, look for that 20-year bond to go downside, then you're going to see the daily chart obviously do the same. But again, bonds come up, market index was down Thursday, Friday, so the reversal of the two. All right, let's jump into the market cap leaders. Again, Apple, Triple Q, NASDAQ futures, again, pretty much shadowing each other. T3 moving averages downside, 50 below 144 here on the daily. So Apple not looking great. Resistance to the upside. So I don't know about that Apple, guys. It's going to be a struggle here. Finding last year in 2015 couldn't break above the 50-period SMA, but still finding support here at the 200. So we're in a quasi contracted zone here. Again, if you're looking to get back into Apple long, watch for the solid body tail up to get back upside. And then obviously we found support here at 93.01. So intraday setups will mean everything if Apple's going to turn itself around. All right, on the technical momentum side, Amazon great earnings this week. Again, this is a 4-hour chart. You had a much better setup on the intraday, but again, holding upside. T3 moving average, that's what you want to look for. And in these charts that have a pullback, found support at the 50 and back to the upside. You see this, Jedi traders? You don't need to pay hordes of dollars to anybody else out there. Simply take the names that you follow every day, put them on a chart like this, and you have yourself a nice supplement to your trading strategy. Taking a look at the Facebook earnings, price action, similar picture there, pullback and back to the upside. So again, Facebook all in the green, technical momentum strong. Alphabet, Google to the downside, price action following through. As we can see, T3 moving averages crossing over, finding support here at the 144. Look to the weekly to find support here at 669.2 if the 4-hour chart continues and holds to the downside. What's going to tell me that we're back in an uptrend? There it is, solid body tails up as long as they can pop back to the upside. Take a look at Netflix. Not looking good. Bleeding Netflix. T3 moving averages back to the downside. I know long chart there on the 4 hours, so you got to jump to the intraday. But again, T3 moving averages crossing over. So where do I look for Netflix? Well, you got to look to Fibonacci lines. But right now the momentum is downside. I've crossed everything. Big picture on the daily is downside. And if the weekly continues downside, you're going to have to look down to 58.10 as the next support. But again, it'll be I have probably a better picture next week if we could see what happens to the market here in the next 5 days. All right, taking a look at Starbucks again. If you're looking for the upside on Netflix, I would look for the intraday setup first. But again, I would not confirm it at this point that we're back in an uptrend. So I know everybody trying to find the optimum buy point. Well, I want more of a confirmed trend, because I'll tell you this: if you get a solid body tail up here and we have a T3 crossover, you're going to have resistance there on the 51.44. That's going to be the telltale. All right, taking a look at Starbucks. Starbucks starting to bleed here a little bit in the red as the T3 moving averages cross over. Same picture as we just saw in the Google Alphabet. Price action to the downside, T3 moving averages, but the bigger picture looks good for Starbucks as she is still in the green. Taking a look at a couple of our FX pairs. Here's the euro holding to the upside. Market started to wash itself out this week. Euro holding upside nicely in the green, but we know the big picture on the euro has pretty much been to the downside. T3 moving averages just crossing over. Let's watch for the solid body Heikin Ashi to break upside. Take a look at the Euro 200 SMA up there will eventually be resistance if the Euro is to continue the climb. Taking a look at the pound, looking at June Brexit, T3 moving averages back to the upside, but again, not looking good for the big picture as she remains to the downside and in the red. All right, total stock market index, as I told you, I thought I had that at the beginning, but let's take a look at it. Again, pullback last week, T3 moving averages to the downside, finding that support at the 50. Take a look at the bigger picture still, and a total stock market index finding support at the 200 looks good. Anything that continues that will have to break above this 105.33, and then the mid cap S&P 600 on the IJR finding support here at the average true range. Only slight pullback on the daily. Again, a little bit in the red. Watch for those T3 moving averages to cross over. If we find support here at the level here on the average true range, finding a solid body Heikin-Ashi bar pushing back to the upside as we already found support here at the 200 SMA, things will look good. Yes, personal holdings in the IJR. All right, let's jump in to wrap this up. As I said, where do you go looking for good winners? Well, let's take a look at Tesla and the IBD TV wrap-up on Friday. Again, talking about Tesla. Why would I want to invest in Tesla? Well, if you believe for any reason from fundamentals, it's a stock to be in. Well, I'd want to look for the I'd want to see the average true range hold here, 239.54. If price action continues to break downside, look for the next levels of support on the the 4-hour chart at the 144, which is around the range of the daily. Again, daily Tesla not looking in the green yet, has to cross over, but that's what I'm going to be looking for if I want to get into Tesla. Solid body tail up. So take a name that's out there, strong fundamentals, put it to a technical, find the intraday setup, watch the 4-hour chart. If you want to get into the long, I would wait on the long here until I show a turnaround, at least on a 4-hour chart. Taking a look at the IBD, looking at the buy point up here, 79.94 on BABA. I'm watching for support here at the 144. Again, the bigger picture on the daily, still in the green, 50 above the 200, but T3 moving average pulling back. Let's see what happens here this week. I'm going to look for that resurgence on a solid body tail up, which might put you into the trade a little bit earlier than the IBD point. So we'll catch up on that through the week and see what happens. There's the FIT, F-I-T, T3 moving averages breaking back upside. You got some indecision candles here on the 4-hour chart, so I'd wait for the solid body tail up. Watch for the intraday setup. The not so good thing here is that we're still holding downside. We got that 50's got to cross that 144 to get into a long. But again, on the daily, you're still holding upside T3 moving averages. So it's going to take a little bit of resurgence for that 4-hour chart to continue to the upside. So not my choice to watch right now, but I just wanted to comment on that. And to wrap it up, SQ square, price action right here, IBD point 15.62. Great example of a pullback. Momentum on the multiple moving averages sitting upside. Here's your HA studies, Colt studies, and there it was, the breakout Heikin-Ashi bar tail up. What's the IBD buy point up here? 1562. You're in the trade earlier here at around 14. A little bit of resistance right here at the average true range, but daily starting to pick up, 50 above the 200, and that's your early setup. All right, Jedi traders, that is the wrap for this week's Technical Momentum Outlook. Feel free to stop by at tradingfibs.com to obtain more information. My trading mantra, one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs, and as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts, and as always, leave your bias at the door when trading. Have yourselves a Blue Zone week. Good day, good night, and good trading.